Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Certainly moving into this week, that strong non-farm payrolls report that we saw on Friday continues to have a legacy in this market. The payrolls report contained strong figures, improving on the payrolls front, lower unemployment, and also previous month's revisions higher as well. So very strong report there. But the only minor problem that you could argue is the fact that the average earnings didn't really show any growth last month, so perhaps there is just a little bit holding back from this being an incredibly strong payrolls report, but still very good number, and that's certainly been driving this dollar in the days since. Just pushing the dollar higher, there's actually been a just under 10% gain in the dollar in the last 5 months now. It's an incredible move higher, but what we've still got is a move back towards the potential 2010 high, which is around about 2 or 3% up from where we are at the moment. And certainly at the moment, although the dollar is looking a little bit overstretched on some of the indicators, it certainly looks like it's got the upside potential and the momentum to continue to push higher. So something that we need to be watching out for this week. Certainly the focus on this week will be the Fed meeting minutes. That is the major announcement of the week. Although there are a few central bank policy decisions to be coming out from the likes of the BOJ, the Reserve Bank of Australia, and also the Bank of England, but with no major surprises. I think it's certainly going to be the Fed meeting minutes that is the big focus this week. Certainly that's what we're looking out for anyway. So where are these markets looking on the FX side? Well, as I said, we've got this dollar strength that continues to run through this market. All these FX pairs are being impacted by it, and certainly euro dollar continues to fall away. Any sort of consolidation continues to be sold into. The euro is now back towards the $1.25 mark. It's an incredible move to the downside, but there is still further room, I think, to go. There's no real support on the euro dollar until we get back to that key low at $1.20. 40 now, so it's a considerable downside still in that euro dollar chart potentially. Moving on to cable, well, cable again had a strong move to the downside on Friday, broke some key supports. $1.6050 was the key low just before the Scottish independence referendum vote. But also we had a $1.60 support broken. That was also obviously a psychological level, but again it was a 50% Fibonacci retracement of a big rally higher on cable as well. So a couple of key levels there broken, but there's no real support now until $1.5850, which is that November 2013 low. So there is again further move to the downside. Certainly that $1.6050 mark on cable now, from being the old support, turns into the new resistance. So you can imagine that that may well be the new sort of ceiling that we get in cable near term anyway. Finally, with dollar yen, there is a bit of a consolidation in dollar yen going on at the moment. There's been on Thursday we started to see some negative signals coming through for the first time in several weeks actually, which begins to question whether this is going to go much further higher in the near term. Perhaps we had a bearish key one day reversal. We also had momentum sell signals as well. Now, sell signals in a strong uptrend like dollar yen, you would take more as profit triggers rather than outright shorting opportunities, but certainly it looks like a bit of consolidation might be seen in this dollar yen chart. It needs to break above that 110.08, which was that intraday high on Thursday. Unless it does that, then you could begin to see a little bit of profit taking come through on dollar yen. So moving on to the indices, well, we've had some significant selling pressure throughout September, and it certainly looks like there's now potentially the possibility of a bit of support that's come in finally as we move towards earnings season. Earnings season in the States tends to be a good growth driver for equity markets, and certainly that's what equity investors will be looking for. Starts this week with Alcoa on Wednesday, which unofficially kicks off earnings season. So we're looking at, on the S&P, a little bit of a base, maybe a little bit of support coming in at 1926, and it's now pushing up towards the first key resistance on that chart at 1978. Moving on to the DAX didn't take part in the strong rally that we saw on Friday because it was on public holiday. It's had a bit of a rebound today, but nothing exceptionally strong yet. And it just still looks as though it's battling with the 9200 pivot level. So if it can hold on to that pivot level, then we might start to see a bit of a rebound on that DAX chart. FTSE 100 does seem to have now formed a bit of support. 64.46 was a key low that we saw at the end of last week. And it's sort of now looking to build on that support. The first resistance comes in at 66.50. And finally on gold, well, commodity prices just generally have been hit significantly by this strong dollar. The likes of oil, silver and obviously gold have been significantly damaged by the strong dollar. Now the gold price has come back towards some critical support levels. Last year you had a couple of lows from June and December. 1180 spot 70 was the June low, 1184 spot 50 was the December low, and that the gold low overnight has just been coming back into that little range there. So really important time for gold now. If it fails to hold on to that support, you could see significant further downside. But at the moment it's just reacting and forming a little bit of support, but I still think that this gold chart is a big sell into strength. The resistance comes in just above 1200 at the moment, 1204, which was an old low from last week, but the key resistance doesn't really start coming until 1220, 1230, and ultimately the big key resistance at 1240. So throughout this week, for the key economic announcements, we're looking at these central bank meeting policy decisions, certainly starting on Tuesday with the BOJ and the RBA, the Reserve Bank of Australia. Neither are set to make any sort of changes to their monetary policy, so nothing too significant could be expected really. Then we're looking at the Swiss inflation figure and also the UK manufacturing production. On Wednesday, as I said, these Fed meeting minutes are important. We've already had this, the Fed provide a statement and also Janet Yellen's press conference on the last Fed meeting, but we're also looking in the minutes for signs of who potentially could be the next dissenter, and also how the Fed is going to be treating this considerable time phrase that it's been using over the last few months as to when it's going to be when it's going to be starting to raise interest rates. So we'll be looking out for a few interesting notes in those meeting minutes. And then looking onto Thursday, we're looking at Australian unemployment and also the Bank of England monetary policy. Again, as with the BOJ and the RBA, no major move expected yet on the Bank of England MPC, but still we're edging closer towards a time at which we might be getting something, but still not yet anyway this month. And finally, we finish off on Friday with Canadian unemployment as well. So not a huge amount of tier 1 economic data, probably just the Fed meeting minutes to really get the market spiced up this week. Anyway, I wish you good luck in your trading throughout the week, and I will speak to you next week. Thank you very much.